Section 21. Almost there. Final underwriting and the clear to close. When we left Ashley in Section 16, she had finally made sense of her closing figures. She understood that her down payment and total cash required to close were not necessarily the same amount. She reviewed her closing disclosure with Rachel, and Maria helped her understand the title and escrow-related figures. Then Rachel called Daniel and said, "We're getting very close. Underwriting is reviewing the final conditions." Ashley immediately asked, "So we're clear to close?" Daniel raised one finger and said, "Rachel didn't say that." Ashley laughed because she has learned one of the most important lessons of this entire journey. Don't turn somebody else's preliminary statement into a guarantee. At this point in the transaction, buyers often believe everything is finished. The inspection is complete, the BINSAR has been resolved, the appraisal is done, the title commitment has been reviewed, closing documents are being prepared. The buyer may already have boxes packed in a garage, but the lender may still be completing final underwriting and verification before funding the loan. Daniel explains that underwriting isn't necessarily finished simply because an underwriter reviewed the file earlier. Depending on the loan and lender, final conditions may need to be satisfied. Employment may be re-verified. Funds needed for closing may be reviewed. Updated financial documents may be required. Credit or other borrower information may be checked again according to the lender's procedures. Title, insurance, appraisal, and other loan conditions may need to be complete. Michael has a broker rule for this stage. The closer you get to closing, the less exciting the buyer's financial life should become. Ashley laughs when Daniel tells her that. Then she says, "Funny you mention that. The furniture store is offering 0% financing, and I found the perfect sectional for the new living room." Daniel stares at her. "Have you talked to Rachel?" Ashley rolls her eyes. "It's only furniture." This is exactly how buyers create problems days before closing. Opening a new credit account, financing furniture, purchasing a vehicle, co-signing for someone else's debt, increasing credit card balances, moving large amounts of money without documentation, changing employment, or making other significant financial changes can potentially affect the information the lender relied upon. Does every financial change automatically kill a loan? No. That's precisely why Daniel shouldn't make that determination. The buyer should contact the lender before making the change. Daniel calls Rachel with Ashley, and Rachel explains whether the proposed purchase could affect the loan. Daniel stays in his lane. He doesn't calculate Ashley's ratios or tell Rachel how to underwrite the file. His job is to make sure Ashley understands that the lender needs to be part of the decision before she changes the financial picture. Here's where many agents get into trouble. A buyer calls and says, "Can I buy a truck before closing?" The agent says, "Sure, your loan is already approved." 3 days later, underwriting identifies the new debt and the financing changes. Now the buyer wants to know why their real estate professional told them it was safe. The better response is simple. Talk with your lender before doing anything that could affect your finances or credit. Ashley decides the sectional can wait. Then another issue arises. Rachel needs one final document from Ashley concerning funds being used for closing. Ashley is frustrated. "I already gave them bank statements. Why do they keep asking me for things?" Daniel explains that lenders have documentation and underwriting requirements that must be satisfied. Complaining about the request won't make it disappear. If Ashley doesn't understand why something is being requested, she should ask Rachel. If the lender legitimately needs documentation to satisfy underwriting, providing it promptly may be critical to keeping the transaction on schedule. This is also where the loan status update, when applicable to the transaction, remains important. Daniel should monitor the financing status rather than assuming silence means everything is fine. If a contractual loan status obligation exists, it should be handled according to the contract. Financing problems are much easier to address when discovered early than when everyone is waiting to close. Imagine Daniel hasn't spoken with Rachel for 10 days because Ashley keeps telling him everything is fine. 2 days before closing, Daniel finally calls and learns underwriting has been waiting for documentation from Ashley for a week. The seller has movers scheduled. The seller's next purchase depends on this closing. Maria has documents prepared. Now everyone is scrambling over a problem that might have been resolved days earlier. This may seem like a communication issue, but communication failures can become contractual issues quickly. AAC R4-28-1101 requires Arizona licensees to protect and promote their clients' interests while dealing fairly with other parties. Competent buyer representation means Daniel pays attention to important transaction developments and doesn't simply disappear between contract acceptance and closing. Finally, Rachel calls. This time her words are different. Ashley is clear to close. Ashley jumps out of her chair. Daniel smiles, but before she starts celebrating, he says, "That is excellent news. Now keep following Rachel's instructions until the loan actually funds." A clear to close is a major milestone, but Daniel still avoids telling everyone nothing can possibly go wrong now. The transaction isn't complete until the required documents are signed, funds are delivered and accepted, lender requirements are satisfied, the loan funds is required, and the closing process is completed. Ashley looks at Daniel. So can I buy the sectional now? Daniel laughs. Ashley, you've waited this long. Let's get the keys first. But before there are keys, there is one more visit to the property, the final walkthrough. And Ashley is about to learn why the final walkthrough isn't simply a ceremonial last look at her new home. That's where we're headed next. Online discussion 1. Ashley wants to finance furniture several days before closing. What should Daniel tell her? Answer. Daniel should encourage Ashley to speak with Rachel before opening new credit or taking on additional debt. Daniel should not determine whether the purchase will affect her qualification because that decision belongs to the lender. Financial changes late in the transaction can potentially affect underwriting, so the buyer should obtain lender guidance before acting. 2. Why should Daniel continue communicating with the lender even when Ashley says everything is fine? The financing process may still involve underwriting conditions, documentation requests, verification, and contractual loan status requirements. Appropriate communication can help Daniel identify problems early enough for Ashley and the lender to address them. Relying only on assumptions or informal assurances may allow an unresolved financing issue to become a closing problem. 3. Why shouldn't Daniel guarantee the transaction will close immediately after receiving a clear to close? Answer. A clear to close is an important lending milestone, but the transaction still must proceed through signing, satisfaction of applicable closing and lender requirements, delivery of required funds, funding, and completion of the closing process. Daniel should accurately communicate the lender's status without promising that no additional issue could possibly arise.